Yeah, I think it does cause certain buyers to rethink what they can afford, but in a paradoxical sense, that could actually be good for the first-time home buyers that can still afford to buy a home, because it might cause investors to reconsider buying an investment property. Even those all-cash investors that would buy with cash and then refinance into an actual mortgage loan might not see as much cash flow from that, and that could open the door for first-time home buyers to get a loan, assuming they can find a house, with the inventory situation being what it is.
When we see the rate increases that we have seen in recent days and recent weeks, Matt, does this take a particular kind of buyer out of the market? Low end, let's say, high end? I mean, where does it impact the most?
Yeah, there's always going to be a few buyers, a certain percentage of buyers that are on the edge of being able to qualify. And when rates go up as much as they have, then that can actually push them out of being able to qualify for a home. Because of the debt-to-income guidelines that are associated with loan qualifications. So yeah, it does take a toll. It's not the be-all, end-all of mortgage rate qualification, but it is felt by those on the margins.
You know, we hear that millennials had started to tiptoe back into or get into the housing market for the first time. Does this chill them, even though, and keep them out, even though 5% is cheap? What do they think about 5% mortgage rates?
I can't speak for all of them because it depends what their income might be, but I know when I was the age of a millennial, which I'm on the verge of being one anyway, that the $100 that Diana just talked about, that could make a difference for some people. And it will depend on what rental rates they're going to be looking at compared to their mortgage costs. So if renting is much cheaper, that could just be a monthly payment decision, as it is for a lot of people.